Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here one more time to give you a fresh update on the market situation. But before we start, click on the subscription button or click on the bell. And if you don't want to click now, wait until the end of the video to appreciate the quality of our reports and then decide to click on our bell. Now, what we're gonna discuss today, Federal Reserve, the interest rate decision for this week. What is the expectations? I'm gonna give you a review on 4 points from a fundamental perspective, and I'm gonna give you also 3 points related with news, the last updates. And also I'm gonna review at the end, as always, 4 different charts, sorry. We're gonna take a look on dollar index, euro dollar, of course, the most important forex pair. We're gonna take a look also on US bonds, and finally, we're gonna analyze the gold market because it's also a reflection of what is the expectations the community investors have on the US dollar and the Federal Reserve steps and decisions. So let me go sharing the screen step by step so we can see everything on detail. Let's take a look first of all on the 4 macroeconomical indicators. I want to share with you this from Trading Economics. You can see that inflation expectations growth rate first of all seems to be getting colder or flat. Flat. The projection is getting flat because it's 2.3% growth rate for the Q4 on 2024. And that's really good comparing with economies like, for example, European economies, right? So not bad at all, but it's decreasing from 3.1 on Q3. Therefore, we could see that the growth rate of US is getting weaker or is in deceleration. It will be a positive factor to go step forward and cut the interest rates. Second indicator from a macroeconomical perspective, what is the readings we can do on these numbers? We got the unemployment rate. If the unemployment rate is rising, it's another reason to cut the interest rates. Is rising? Yes, it is. It's 4.1%, but it's still super low. It's in the area of 4%, more or less, and it's still really good numbers for any West economy. If you check, for example, Germany, unemployment rate is about 6%. Therefore, 4% is nothing. It's a kind of residual unemployment rate, and still we could say that the job market in the United States is strong. So that's why unemployment rate is rising, but it still is strong. So I won't give this one as a positive factor to cut the interest rates. Let me be closing the tabs so we can go step by step every single point. The next one is inflation rate, one of the most important ones because mainly the monetary policy is decided based on inflation rate. We usually say the Federal Reserve has a responsibility, keep these numbers stable and below 2%. Is below 2%? No, it's 2.8%. However, it's decreasing from the last period, and therefore this is positive and it's open the door to cut the interest rate. But it's about 2%, and if it's about 2%, follow the books, follow the rules. It's telling us we should not cut the interest rates if we will be the advisors on the Federal Reserve. We also see the pattern was rising since summer. It's something I highlight in our previous reports. But since then, it's also true that the last numbers in February is giving us 2.8%, so below the 3%, and therefore decreasing the inflation, which is positive to cut the interest rates, but too early, probably too early yet. And remember, we're gonna see in a minute what is the opinion of the members of the Federal Reserve. Consumer inflation expectation is rising. This is not good. If we take a look on also the universities like Michigan, analyzing the expectation on inflation, we can see that they are giving us a higher inflation for 2025 and also even higher for the next year. So therefore, this one, inflation expectations, is not giving us good news or positive numbers in relation with interest rate cuts. Based on these numbers, we should not cut the interest rates. And then as one, retail sales published yesterday on Monday, 17th of March, just 2 days before the interest rate decision. And we can see that the monthly retail sales is also decreasing and is below the expectation, 0.2%, below 0.6% expected, but still recovering from minus to 1.2%, which is understandable because it was January minus 1.2% retail sales. coming from December to January. December is the month of Christmas, so everyone is buying presents, and therefore we usually experience the boom, that kind of boom in sales in Christmas, and therefore January always, in general, it's a negative number. So in these terms, I would say it's not so positive in terms of economy, and therefore good for the interest rate cut decision, because keep in mind, we want bad numbers to justify the interest rate cuts. Now, what is the opinion of the Federal Reserve? And let's take a look to the charts. We go two different topics, two different news. This chart was shared by Reuters recently, a few days ago. I shared on our daily report this, which is giving us, again, an inflation expectation rising, and therefore bad news to make the Federal Reserve responsibles and advisors keep on hold the interest rate decision. And if we take a look what Waller, member of the Federal Reserve, said, uncertainty over trade war, other policies should paralyze rate moves. This man is saying, as one of the most important characters in the Federal Reserve is saying, we should keep on hold the interest rate decisions until the new policies from Donald Trump are clear, the effect of those new policies are clear, and also the war in Ukraine is revealed to us what is the situation with commodity markets, for example, really influenced by the war, and also with the monetary policy. So therefore, we got important members of the Federal Reserve advising to keep on hold the interest rate decisions until we see better numbers. Now, what the charts are saying, we got a dollar index getting weaker, as you can see on the chart, losing 103 points. This is telling us that the Federal Reserve could cut the interest rates because the dollar is getting weak, and if the interest rates are getting cut, the value of the dollar is dropping. But is this the reason, or is the reason or the fears of economical recession? Well, I will say is the second reason, not the Federal Reserve cutting the interest rate. Why? Because we also got the 10 years bond and 2 years bond, both of them, are about 4% yield. The yield is rising back again about 4%, and therefore this is not possible. Traders on fixed income will not be selling bond, US bond, if the Federal Reserve was about to cut the interest rate. So in my opinion, it's a no. There is no interest rate cuts this week because US bonds the yield of the US bonds is rising about the 4%, and that's incompatible with interest rate cut. Obviously, the most strong pair, euro-dollar, is rising. Euro is rising against the dollar, and this is because of the expectations on a new announcement from Germany of invest 500,000 of millions in new industry for the war, for new protection of Europe, blah blah blah, and so on. The program they announced for fiscal expansion is attracting a lot of investment to Europe, potentially. At the moment, that's the hot effect is causing on the market. But it's also true that the dollar is weak at the moment, and therefore euro-dollar is rising probably more because of European effect than any interest rate influence. So still, I will say this is not an indication of the Federal Reserve is cutting the interest rates. Finally, gold is rising, and in this case, we will say that gold usually rise when inflation is a problem and you want to protect the loss of value of your currencies, and that usually happens in an inflationary scenarios. In this case, gold is rising, dollar is weak, which makes a lot of sense because it's the main asset for reserves is either dollar, either gold for central banks. So if the gold is rising, it's because the dollar is not strong enough, and that will be compatible with the Federal Reserve cutting the interest rates. In this case, gold rising is compatible with the Federal Reserve cutting the interest rates. But still, I will say the factor that is taking the gold up is not the Federal Reserve decision, which still I believe is a no. They are not gonna cut the interest rate this week. But gold is rising because Middle East is a chaos. It's a completely chaos. We got US for the first time with Donald Trump on the White House attacking the Houthis. We also got confrontation between the forces, the new military forces in Syria fighting against Hezbollah army or militia. We also got Israel attacking Gaza again. So therefore, I will say the tensions between Iran, Israel, Hezbollah, the new troops in Syria, and even U.S. Army against the Houthis are right now on the spot, and that's why the gold is rising, because the risk is rising. Well, that's all. I think it was quick, fast, but giving you the key points of the market at the moment. I hope you enjoy, and if you do, please click on the bell and click some subscription, and see you in the next reports. Bye bye.